you're probably leaving thousands of dollars on the table, or you're deducting things that you really shouldn't be. And guess what? You probably didn't even know it. TikTok says write off your groceries. Your buddy says write off your gym membership. Or better yet, someone just says write off everything. Writing off everything is not strategy. It's really just how you get audited. But guess what? Today I'm going to be giving you the actual IRS rule for what's deductible and what's not. Also, a few industry-specific examples like goods and service industries. And most importantly, documentation, what you need to document that expense that is ordinary and necessary for you and your business. What's up, guys? I'm Mike, back at it, CPA from Ledgerly, co-founder alongside my partner, Andrew D'Amico, where we help business owners maximize their deductions while steering clear of the IRS scrutiny. And when most people get in trouble, it's not because they didn't have the expenses, it's because they couldn't confirm or prove that those items were actually ordinary and necessary for them and their business. So let's jump in. Let's make this simple for you all. Here's the golden rule. In order to write off things in your business, also known as business deductions, business expenses, they must be ordinary and necessary. Ordinary means it's common and accepted in your industry. Necessary means it's helpful and appropriate. The lights are going to stay on to keep your head afloat, and it's also necessary to take your business to the next level. Notice what it doesn't say. It does not say write off anything you want. So, for example, a laptop, yeah, I'm an accountant, I'm a CPA. Heck, I'm using my computer equipment to film this video right now. Ordinary and necessary, right? Because outside of me filming this content, I'm also using it for bookkeeping for clients, for tax preparation for clients, for tax planning for clients, hopping on Google Meet and Zoom videos with clients. I need a computer. Now, a gym membership, unless you're a fitness influencer, no, a gym membership is most likely not ordinary and necessary. Yeah, we go to the gym. We got to keep our head, clear of stress, get the blood flowing, get the juices going. But is it ordinary and necessary for me to have a gym membership to make sure that I am functioning? Maybe yes, maybe no. If we can prove that it's actually ordinary and necessary for our business, then sure, but make sure you document it. But for the most part, gym membership, that's personal. How about clothing, a suit? Normal clothes? Usually no, that is not a business expense because you can wear it outside of work and the IRS treats that as personal. But how about some branding? Let's say I go out to dinner wearing my Ledgerly apparel. That's advertising and marketing. I want to show that we are a CPA firm. If someone asks, oh, what is that? What's your company? Then you're starting to talk about your business. So that's clothing, right? How about a trip? Well, it depends. Is it vacation or is it a business trip? Are you going to a conference? Here's the good test. If your doorbell ever rang and it's an IRS agent and they go, trick or treat, show me your tax deductions. And you're like, I don't know if I can explain that one. And you're tripling and you're fumbling over your words and word vomiting. Yeah, probably don't deduct that, right? Don't deduct it. All right, now let's talk about some deductions that apply to most business owners. Number one, home office. Now this is a big topic. It's a topic in itself. We have plenty of videos out there. But home office, look, I'm recording this in my home office right now. This office, aside from the guitars on the wall for some artwork, this space in my home is 100% used for business. Whether I'm on client meetings, I have another desk behind me. So when Andrew comes over the house for us partnering and strategizing, clients come over, sit on the couch, the list goes on. This is my home office. This is my dedicated space to conduct business, right? But if you have a dedicated space in your home that is used regularly and exclusively for business purpose, then you can deduct that percentage use of your home's cost. No, your kitchen table does not count, but it could count maybe if we're having a board of advisors meeting over a nice meal, maybe on a holiday. Again, a loaded topic, but home office. Now, number two, auto, like vehicle, your mileage, your actual use. Client meetings, going to job sites, business errands, going to Staples. Now, those miles can count, but commuting from home to your main office, no, that's not ordinary and necessary. That's just you going from one to another. That's personal use. Now, number three, software and subscriptions, like a bookkeeping software, design tools, CRMs, web hosting, domains. If it's for business, it's generally tax deductible. How about contract labor, VAs, designers, developers, CPAs, attorneys? No, those are also normal, clean write-offs. Education tied to your current business. For us, CPEs, continuing professional education. If it improves the existing skill of you and your business, boom, write-off, baby. But if it's training for a new career path That's where it gets a little bit tricky, a little bit shaky. Let's say we're an attorney, but we want to go into the real estate space. Well, can we prove that there's a connection between the real estate and your current law work? Are you going into real estate law? Then maybe that will help. But if we're going into an entirely different business, then that's an entirely different business operation, which would be essentially a startup cost. So it could be deductible, but it gets tricky and there's more codification rules there. Now, how about meals? Meals with clients, meals that are ordinary and necessary for you, your employees, your clients. Generally 50% deductible, right? But in order for them to be deductible, we need to make sure we are documenting what we discussed at that business meal. Do we have a transcript? Do we have the receipt? Can we prove that business was conducted over that meal? Pretty simple here. Real business operations for a real business purpose. That's it. All right, let's make this real with a few different industries, right? For our consultants out there. Maybe you're freelancers, 1099 contractors. Do you have specific software you need? I'm assuming you're operating out of a home office. Any co-working spaces that you're renting or leasing out? Client travel, or you hiring a contractor to help out? Guess what? All those might be ordinary and necessary for you and your business. How about online e-commerce shoppers on Shopify, Etsy? Your inventory for your cost of materials, your shipping, your packaging, storage fees, ads, a website. Guess what? All those ordinary and necessary for you. The list goes on. How about content creators? Like us at Ledgerly, Andrew and I were CPAs, we're tax strategists, but guess what? We want to create content for you, for our viewers. Now, we don't have the best software out there. We don't have the best cameras out there, but we work with what we got. But for someone who's a full-time content creator, camera gear, editing software, props, backdrop, the travel to go from shoot location to shoot location, and the contract labor for people that you're paying, all deductible for you content creators, general contractors, people in the trades, HVAC, electric, plumbing, for you, tools, job materials, your insurance, licenses, heavy equipment that you might need to purchase. How about for you real estate agents out there? Your agency fees, your signage, your marketing materials, mileage from property to property, your continuing education. Guys, the list goes on. CPAs, attorneys, do your due diligence. See what NAICS code you are. See what you fall under. And maybe go on ChatGPT. Hey, ChatGPT, find me a list under my NAICS code. This is what I do. What are all the different deductions that are ordinary and necessary in nature for my industry? If it's ordinary in your world, in your trade of business, and it helps you generate income and take your business to the next level, boom, baby, boom, we got a deduction. Now, here's the part that most people tend to miss. The IRS doesn't care what you claim, they care what you can prove. So this is what you need to do to protect those deductions. Make sure we have an email, a receipt, an invoice, proof of purchase, the date, the amount, the vendor, the agreement that you have for that purchase. Number two, do you have the bank or the credit card that we actually use for this purchase, the proof of the payment, right? And number three, valid business purpose. Can we prove that it was a valid business purpose? For example, for meals, who did you meet with? What did you discuss? Do we have minute notes, meeting notes? Did we have an agenda if it was a board meeting? For travel, what was the travel for? Did we have an itinerary? Did we attend a conference? Was there a link to that conference? Was there an Eventbrite to that conference? For mileage, do we have a travel log? Do we have an app on our phone, Mile IQ or something like that, where we hit go and it's a GPS tracker? If you can't back it up, it could potentially get disallowed. That means adding back more income, meaning more tax, more back taxes, penalties, and interest. And if not done correctly, this is where people can get in trouble really quick in hot water with the IRS. Here's the simple rule to live by. Deduct only what's ordinary and necessary and document it like you need to defend it. That is exactly how you stop leaving money on the table and avoid creating that potential audit risk. So if you want help creating a clean bookkeeping system, crossing every T, dotting every I, and making sure that we're taking advantage of all the deductions, not just some of the deductions, but all the deductions you are entitled to, make sure you click the link, get in touch, book that call with us, because that's exactly what we do. So guys, thanks for tuning in. Make sure you like, comment, subscribe. Stay tuned for more videos like this one. And hey, we'll see you on the next one. Take care.